Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you are joining me today. And holy smokes, Batman, we have a lot to cover. So we've been placing all kinds of different trades, stock trades, long call vertical trades, trades with targets, iron condors, long calls. And so today is brought to you by the numbers 3, 4, and 5, because we want to review 3 trades that need a little attention. We want to place 4 new trades at least. And then we have 5 trades that have hit our targets. So that is a lot to cover in 45 minutes. I wish I had an hour, but I do not. So this is what we are going to tackle today. So I hope you guys have your fingers flexed, ready to take some notes, ready to play along in your paper money account. And the types of trades that we're looking at today, I've already talked about. We have iron condors that we want to manage. We have a buy right covered call where we're going to buy the call back. We are going to look at placing a 1 ATR trade on a stock with using a long call. We're going to do some long call verticals. Somebody asked me if I was going to do some verticals today because they have a question, and quest away. We've got the fantastic Mr. James Boyd with us in the chat today. He's a friend and a fellow coach. I dropped by his house the other day with a few flags because it just, was missing a little je ne sais quoi. And so, he was, he was a really great sport about it. And if you are not following us on X, you missed all of that. So, you don't want to miss the fun stuff in addition to all the charts and the serious nature of what we cover here in these webcasts. So go to Barb Armstrong CS and James Boyd CS. James posted a little video and it was kind of brilliant. Anyway. Okay, let's get right down to business because, like I said, we have a lot to cover. We do a combination of both stock trades and options in this class. This is an intermediate level class and we move quickly. So I am assuming, that you already know, say, what a long call vertical is. If you don't, type something into the chat and I can give you a 15-second overview of a strategy you may not be familiar with. But I'm assuming, that you've kind of gone through or are going through the Getting Started with Options series and have gone through the Getting Started with Technical Analysis series. If not, I invite you to join us on Tuesday for those classes. But no, options carry a high level of risk, aren't suitable for all investors. We're using the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills. But know that there are some nuances and differences. One of the differences is that short options will never be assigned early in Paper Money, but they can be assigned early in a live account. We are going to do a super quick market overview. And why do I make that so quick now? Well, this morning, James and Kevin Horner got together at the market open at 9:30 Eastern, and they spent 45 minutes reviewing all of that stuff. So, So, there is a Trader Talks 4 mornings out of 5. So I refer you there because they do an awesome job. And this afternoon, I'm not sure who is covering it, but it's kind of like a week highlights of the week class at 4 o'clock Eastern. So you can check that out also. We're going to place some new example trades, spend some time managing trades. If you have never been to a live event, it was how I was introduced to this world of trading back in 2011 as a client. I am a huge fan. And I love going to these now as a coach. So if you haven't been to a market drive, they are wonderful. We'll have the coffee on, we'll provide breakfast, lunch, and a great reception at the end of the day. So we'll feed you mind and body. And we start with what's going on globally in the markets and go all the way down to looking at individual stocks. Okay. And then we've got a 2-day event in Houston, intro to technical analysis one day, intro to options the next. And we round out the weekend before Christmas with advanced options. Ben Watson and I will be at all of these along with a cast of, thousands. And last year we did an event in Miami, I think the weekend before Christmas, which I thought was insane and that no one would come. And it was a packed house. So if you're thinking of going, man, register quick. Okay. Be there, be square. And if you're coming, Please come up and introduce yourself. I'd love to meet you. We can take a picture together and get to have some conversation. So that would be wonderful. So here's our quick overview on the market. The S&P 500 hit a new all-time high on Wednesday, pulled back yesterday and is moving on up. So it's hard, year to date, this index is up almost 16%, so pretty bullish, right? Right. How about the NASDAQ? Well, it's up 22% year to date. It too, all-time high on Wednesday. You don't even need a good arm to be able to throw and hit that all-time high from where we are today, up, 0.7%. How about our small caps? They're up a more modest 10% year to date, but still looking, pretty strong. The 30-day moving average over the last 6 months has really been acting as a support level and continuing to do so. And how about our Dow? Oops, I can type. Similar, all new intraday all-time high Wednesday. Do we see a theme here? Yeah. And pulled back for a couple of days, but this is down what? A smidge. 10 cents. 0.03%. So who knows where we'll be on that by the end of the day. And then our volatility or fear index, it's moved up today by 4.5%, but it's still sitting at 17, so anything under 20. And if you scroll down a little bit, a week or so ago, I posted a short video on the VIX, on interesting information on the VIX. And when it's under 20, the market's considered to be pretty stable. Fear is considered to be low. Over 30, Chicken Little is doing laps if we're over 30. People have their knickers officially in a twist. So, this is a good sign for market confidence, shall we say. Okay, so let's come and do a little bit of trade management here. So I want to look at Intel. And why do I want to look at Intel? INTC. Well, we bought the stock back here and we did a covered call, which we bought back. And then we sold another covered call here at the 40. And the purpose of this was we wanted to make a little money. We weren't in it as a long-term, we weren't putting a ring on it. Let me put it to you that way. It wasn't a long-term trade, but, we're now in the money on this. And I know I've had people say before, like, how come I did this in my live account and I'm in the money and I haven't been called out? Well, just because it's in the money doesn't guarantee you'll be called out. A lot of times, positions can be in the money for weeks and not be called out. And so don't think that that's the case, but we have, this expires November 21st, and we are just in the money. But if we look at this, what do you see? Well, if I'm playing I Spy with my little eye, I see a bull flag setting up, right? So nice move to the upside, pulled back. And today we have this Harami pattern, which is a bullish sign. So if I come to the monitor tab over here, and we look at, this is our buy rights right here. If we look at this, we're up almost $500. And so we sold this for $270. We could buy it back for $241. And if you're saying, well, like, weren't you cool with being called out? Yes. But you know what? If I can buy this back, make a little cheddar, like, enough to go out for a nice lunch, maybe, like at $29.50, then if it goes up, as I'm anticipating, the technicals might suggest it might, maybe we could sell one at a higher amount. Instead of selling the 40 call, maybe we could sell the 43 call. So we are going to take this call, create a closing order, and we are going to buy it back. And we're not making a lot, but we have that appreciation in the stock. Maybe we'll see if we can, buy it back for a little bit less. Okay, so we've set that in and we've decided to exit that position. And what do you know? We have bought that one back. Okay, so that was INTC. Now, are we bullish on INTC? So we still own 100 shares of stock, and we're going to wait for this to, our anticipation is it's going to move to the outside. Now, wouldn't you know it? Like now it's down by 8 or 9 cents. But if we were bullish on this, could we do a long call vertical at say the 40 and maybe the 41? And so if we look at this and we say, well, how much could we make if we did that? And if we come out to November, so it gives us 3 weeks. So, and what are we looking for? And if you don't have an example trading plan, you may want to go to the trade management mini sessions, and there is an example trading plan for a long call vertical, also one for buy rights. So, and you're looking for, does it trade more than 1 million shares a day? Check. Do we have lots of volumes on the options? Check. Is there a tight bid-ask spread? Is it less than 10%? So is it less than 23 cents? Yeah, it's 6 cents. So check, check, check. Next question is, can we get enough juice for it to be worth the squeeze? Like if I have to pay 75 cents for it, might not be worth it. But if we look at this and we say, well, we're buying the 40, it'll go to the next closest one. If we just went to 41, doesn't have to move that much. We're paying 38 cents. And our goal in these, now how much could you make? Well, we could make 62 cents a share or $62 a contract. And how much could we lose? We could lose the entire amount we're spending to get in. But if we look at this and we say, hey, you know what? And this was a conversation I had to have with myself. I had to take myself out to the woodshed on this because the old me wanted all $62 worth of profit. And then, the new and improved version, the Barb 2.0 said, well, maybe don't be so greedy. If I could make a 50% return. So if you go to a Halloween party tonight and you say, can you believe this woman suggested I get out with only a mere 50% return in 3 weeks-ish? Like, how insane is that? They probably think you were, you'd fallen and hit your head running around the neighborhood trying to get candy. So what we're going to do is say, hey, when this gets to, if I'm going to assume this is 40, when this gets to 60 cents, that's a 50% gain. I'm going to take the money and run. And so I'm going to take this line, I'm going to activate it, I'm going to move it up to 41. And actually, the easier way to do that would have been to just come to edit properties and just type in 41. And now that we no longer have a covered call, we're going to do a long call vertical, 40 and 41, and it will expire November 21st. Okay. So this is how far it has to move. It has to move above 41 and stay above that. Okay. And how many are we going to do? Well, we could risk up to $500. And so that means we could do 10 of these and we're risking $380, right? So we could do 12. If we did 12, we're risking $456. Okay. So a short put vertical is not the same as a long call vertical, but both are bullish in nature. Okay. The short put vertical is more forgiving in that the stock doesn't have to move up through a strike, but you tend to be risking more for the potential reward depending on where you put your strikes. Okay, so on this one, this is our long call vertical. I'm going to come back and edit this because we're going to put in our target, and our target is to get out. I'm going to create an opposite order when it's worth 62 cents. And that's just basically, I'm just kind of doing the math in my head, but 42 times 1.5, it would actually be 63. So we'll leave it at 62 cents. And we're looking for that 50% return. Okay, so that's Intel. So we both managed a trade and placed a trade on Intel. Now, we did a couple of iron condors, and we haven't done many iron condor trades. We haven't done very many iron condor trades, and why not? Well, one, in February and March, the market was kind of tanking, and so that wasn't a good time. And then the market's been very, very bullish. And so we did two, and you can see here we're down on both of these. But let's look at CRM first. And somebody just said, can we look at CrowdStrike? So we're going to look at both of them. So when we look at this, we had put this trade on here. It was in the middle of the pack. It had been, trading in a sideways motion. So in spite of the fact that the market had very bullish, we're down 23%. On CRM is down 23% year to date and has been going a whole lot of nowhere. But since we placed this trade, it kind of went up. We bought back the call, the short put vertical rather, but it's pulled back and it looks like it's moving to the upside again. Now we could wait over the weekend because time decay would work in our favor. But if it moves dramatically to the upside again on Monday, that's just going to increase the hurt. So if we come to the monitor tab, we are down by $45 on this trade. So, we have 1 week to go. So, this could roll back over. So we're down by $45. And so we are going to say when we look at the chart, it's looking a little more bullish. So to be conservative, we are going to close that out. Now, if you decided to wait until Monday, could do that too. Okay, but we're going to look at this, right click, create a closing order to buy it back, recognizing that we're taking a small loss on that. Now, when we do this, and we come to our monitor tab and we look at CRM. It was CRM. And we're going to come back to. Okay, so we put on our iron condor for $2.09. So we got paid $2.09. Okay. So let me just bring up my drawing tool. So if we look at the whole trade, and you may say, well, we lost money on that. Well, on the second side of it, but we were paid $2.09 to get in when we entered the trade. And then we bought back the put vertical for 19 cents. And so now we are up $1.80. Sorry, $1.90. Okay. And then we, I'm just assuming we'll get out for that 45 cents. And so if we look at that 45 cents, we were still up 145, or at the end of it all, we made $145, which is a base hit. And so still not too shabby. Okay. Okay. Now, CrowdStrike, not quite as happy camper, although it's come back a bit. It was over 300 we were down when I first looked at it this morning. And so this one, we also bought back, an iron condor is a credit spread sandwich. We legged out of this in that we bought back the short put vertical. And now we're at 450 on this. We were paid $1.70 for this side of it. So we'd be down $277.50 if we close it out today. Well, let's look at it. So when we look at it, we put it on down here, and there was the volatility on this stock was so high that on this day when we placed this trade, we put the call side way up here. And it's still, but what are we seeing set up here? It's kind of a bull flag, right? And it's down by only 15 cents on a $500 stock. It's down by just a very teensy amount. So this, if I were to look at this now, I don't think this is looking like it's continuing in a sideways range. I think this is looking like a bull flag and that it's bullish. And there's still, we're at 420 here. We could lose another $80. And so we're just going to say, and we've got 21 days to go on this. And so we are just going to highlight this, right click, and create a closing order. Say, you know what, we're cool with buying this back. Actually, let's make it 425. And we just want to exit that position. Now, if we come to the monitor tab and we look at this and say, this is CrowdStrike. We were paid $5.45 when we got into this. So if we look at this, $5.45, sorry. So when we look at that, we received, and we did one contract, so $545. We bought back the short put side for $1.10, so that's $4.35. And then if we end up paying $4.25, and I'll make sure that we end up we were up by $10. When I looked at this earlier this morning, we were actually losing a little bit. So if we can make $10, maybe we're not dancing in the aisles, but it's not bad. We should be smiling because, at least it'll pay for the parking if we go for lunch, maybe depending on where you live, but so we're out of that CRM trade. Okay. And we've got our exit, teed up, but I think it's worthwhile to just kind of practice and then to go through that exercise of looking at how we manage these. And so that's this one. And this number isn't set in stone yet because we're not quite out of it, but it gives you an idea of how to calculate how we did that. Okay, so that's CRM and CrowdStrike. So I said today was brought to you by the numbers 3, 4, and 5. We have more positions on, but we can look at, this class is taught Mondays and Fridays. So on Monday, we can look at some of the others. So there's our first 3 done. So now I'd like to come and place another new trade. Somebody's saying that's enough to pay for the options commissions. And that's a good point because, we do have to pay a transaction fee of 65 cents per leg per contract. So it's not, in this case, if you only make $10 and you had to pay, $2.60 to get in and $2.60 to get out, you paid $5.20 in total in commissions on that trade. So there went 50% of our $10 profit. Okay. Okie dokie. Okay. So let's come and look at Marvell. So, and Marvell, we can kind of do a 3 hits in one here. So Marvell, we bought the stock and we had a target on it. And with Marvell, we also did a long call on it. And our target was $93. And it opened this morning at $93.40. And so it hit our target for both the stock position and for the long call. And then it ran way up and now it's kind of come back. So when we come and we look at this Marvell, and one of the things that we were going to do is have a conversation around, are we better to do a stock position or a long call position? And so we were going to compare and contrast them. So if we look at this and we say, okay, here is the last trade. Here is our long stock. Okay, so on the 24th, so that was last Friday in this class, we bought 58 shares of Marvell at 85.27. 85.27. And then it was sold this morning just after the market opened, see at 7:31 Mountain Time, for 93.36. I did the math ahead of time. So we made on Marvell $8.09 a share times 58 shares. So happy Halloween to us, because then we were up by $469.22. So for those of you who might be baseball fans, that's not a single, that's a double in our books, or a triple. Like, we started this year with $25,000. So, you know, a $500 gain, I'm rounding up, would be 2% of our entire account value. And if you want to talk about commissions, how much did we pay in commissions on this trade? That would be zero, because it was a stock position. And then if we're looking at our return on risk, you know, technically speaking, this amount could have gone to zero. So we were risking about $5,000. Now, we did have a stop in place, but you know, if we take our gain of 809 and divide it by that 85.22, that's about a 9.5% return, which makes sense eyeballing it, right? About 9.5%. Because if we'd made $850, that would have been 10%. So it, you know, and for a trade, we were in for an entire week, you know, not quite an entire week. That is, you know, not too shabby. Okay, if we come and we look at the call side, how did we do there? Well, same day, because we were going to compare them, we bought a call. Now, how much could we have lost here? $485, the entire amount we paid. We got out for $8. So here's our long call. $8. So if we take our 8 and we minus our 485, we subtract that, we were up by 315. And then if we look at our return on risk, which is, you know, taking the 315 and dividing it by our 485, our return on risk on that was 65%. And here we're risking $485. Here we're risking that, you know, our position size was in the neighborhood of $5,000. And so you might say, well, here I got a paltry 9.5%. And this is, both of these are in 1 week. Here I got 65% and I was risking less. Now here, you know, technically we made $315 less, you know, $1.30 for commissions. So we made, you know, less in dollar terms, but we were risking less. But, you know, the thing you have to keep in mind is that the probability of this stock going to zero is quite low. It's possible, but quite low. The probability of this 485 going sideways, the stock going sideways, and this expiring worthless, because we have time decay, you know, there was a greater probability of this losing value. And so it's hard to compare these as just an apple to apple. The one thing that I will say you may want to take into consideration is the fact that, you know, we have, like right now, 18,000 sitting there kind of twiddling its thumbs, not doing anything. And so if you say, well, I have $5,000 that's currently unemployed, I could use it to do this short-term type of trading strategy. And both of these were designed to be income strategies. And you know, both of them had the same swing trade target. Okay. So, you know, you have to decide, if you don't have, maybe you only have $1,000 available to trade in your account, well, then this one might fit the bill. So you have to look at what your goals are, what your account size is, and what's available to trade. And so, these are all things that we have to consider. Okay. So that's that one. Okay. Now with Marvell, and it's changed, it's changed a little bit. So this has kind of gapped up and come down. And so when we have a big inverted hammer like this could be an indication that the stock might pull back for a few days. So, I was looking with Marvell at doing a long call vertical, and some might say, but this is, it gapped up on the open today, and this was old resistance, now new support. But if you go through my Getting Started with Technical Analysis, and I did a bunch of short videos, and let me just show you where those are. Let's come to Trader Talks from Schwab Coaching. And so if you have not subscribed to this channel, the Trader Talks from Schwab Coaching, there's a button in the bottom right corner of your screen. So I encourage you to do that. Also, if you're here for the very first time, feel free to type a greeting into the chat so we can welcome you. But, when you first come here, whatever is currently being taught, this is what comes up first. But if you come to playlists and then scroll down, there are these trade management mini sessions. And one of the things that I've done is this collection of short videos that I'm continuing to add to. I'm about halfway through. But if you look at this, what is a hanging man and what is a shooting star? When that happens at a resistance level, it could be a sign that things are about to change, but we don't have confirmation yet. And so, you say tomato, I say tomato. You might look at that chart and say, well, I see it as being not a shooting star. I see it as an inverted hammer at a new support level. But, the jury is still out on that. So we could, we don't know who's right yet on this one. And so we may just want to wait until Monday. So RG is saying, does Marvell show a shooting star? and the answer is, it might be a shooting star, but it could, which is this candle indicating that change may be a coming. But with a shooting star, you want confirmation. The confirmation would be a close below the body of that shooting star on Monday. Now, I might say, I think it's an inverted hammer, which means same candle pattern, but it's at a support level. Okay. Am I? Yes. Yep. Yep. Now, hold on one sec. Okay, sorry guys, I just got this tickle in my throat. So somebody said, where are these trading plans? So seeing as they're in this same session, so at the top are these shorts on the candlestick patterns. And then if you scroll down, here's the trading plan for the buy rights. Here's one for short put verticals. Here's one for long call verticals. And then there's one for long calls with ATRs, which will lead us to, the next trade. So if you want an example trading plan, because we're going to do a long call with a 1 ATR target next. All right. So let's go back to our chart. So, is this that inverted hammer at support, or, is it this, a candle appearing at a resistance level? And we won't know until we have confirmation. And who knows how it'll look by the end of the day. So when I looked at this earlier, we were going to do a long call vertical on it because it was a different candle. But these are live. So Chuck, the minis, if you go to Trader Talks from Schwab Coaching and look for the trade management mini session playlist, that's where they are. All right. So that's Marvell. We were going to do a trade on that. We're going to hold that one till Monday. And then we reviewed the 2 trades that we already had on. Now, we did a similar thing with NVIDIA. I'm not going to go through the math on NVIDIA because we're going to run out of time. But with NVIDIA, we had a target. Okay. And with NVIDIA, when I looked back, so let's just come here. So on the 20th, so that was October 20th. So that was a week ago Monday. Okay. We placed a trade. We bought 27 shares of stock. And then on the Friday of last week, we bought the call. And then on Tuesday or Wednesday of this week, I guess it was Tuesday, it hit our target. And so are we looking at this and going, oh, wow, that really sucks because it ended up going higher. We could have made more. Like, hey, guys, we did a swing target and it was successful for both of them. And it worked out quite nicely. And so, we are not going to beat ourselves up because we didn't make even more than we were targeting for. Okay. So if we look at this and we come to our account statement and we look at NVIDIA, I did do the math on the stock, because you're taking 195 minus 183. We made $11.64 a share for our 27 shares. So that came out to $314 and just over a 6% return. And then we had an 85% return on the call. We bought it and we bought that call 4 days later. And so like that whole risk reward discussion we made on that one, $440 on the option. And so, all of these little wins, that $400, that $300, it adds up. Because we started with 25,000 this year in our paper money account. We're now at 35,000 and change. We're up just over 40%. So when you look at that and you say, well, did we have a lot of big wins? We had one big win this year, one where it was like over $1,000. And so it's just a lot of little wins, being consistent, being disciplined. And, this is a paper money account. So there's no saying that you'd get these exact same results in your live account. But, we meet twice a week on Monday and Friday for 45 minutes. And this could change by the end of the year. It could go up and it could go down. What the market giveth, the market can take it away. And that's why it's so important to be disciplined with these things. Okay. But if you did this, go through the math and make sure you understand, what your risk and reward was and have that conversation with yourself on why did we do it? Well, we had money sitting in the account that was unemployed. And that was part of our decision. So I want to do, and we've got to really move. So if we don't get to both of them, CSX was one where, and with NVIDIA, we do have earnings coming up on the 19th. But with CSX, here's a stock, that's just been kind of moving up. And if we have a bunch of money sitting in cash, you could look at this and say, well, could this be a cup and handle pattern setting up? It could. And you know what? We could buy some stock and have a swing target here, or we could do a Fibonacci target. But if we wanted to, we've been doing a lot of swing targets and we kind of made up this idea of maybe we want to take the kids to Disney after we go to Anaheim, or take ourselves to Disney after we go to the Anaheim event. So could we just buy some shares, and then when it gets back up to around this $37 mark, exit the position? And you might say, well, would that be even worth it? And so if we come here and if we look at CSX, there have been a lot of analysts raising targets of late, you know, to 42 to 40 to 39 to 41, you know, and all of those would be above our $37 target. And are these guys going to be right? Well, they're not always right, but it seems like there's quite a few of them on the raise the target bandwagon. And if we said, okay, if we do this, and let's change this to our calculator, and let's say we put in a target of 37 and we're buying it for 35.70. Oops. Yeah. Okay, 35.70 to 37. That's $1.30. So if you say if my target is to make $1.30 and I divide that by my 35.70, is that worth it? Well, that calculator and I, some days we don't get along. 130 divided by 35.70. That's a 3.6% return. And, you know, like, not too shabby. And some might say, well, I'd rather wait till it gets here and breaks out. And you know, that would be totally legit also. But we're going to look at this and say, we've got some employees, given we have 18,000 of them sitting here twiddling their thumbs, maybe we could just take advantage of that. And so, you know, how many shares could we buy? Well, if we can buy $5,000 worth, I'm going to do this on my calculator, 5,000 divided by 36, we could buy 140 shares. So we're going to come here, right click, buy custom with an OCO bracket. Now, where would we put our stop? We might say, well, here was our recent low at 35.06. I'm going to go 3% below that. So we're going to make our stop 34. Okay. So yeah, I'm going to make it just a little lower than that. I'm going to make it 33.89. It's 34. I don't like those round numbers. And then we're going to make this 37. And so this is a dating strategy. Again, we're not putting a ring on it. This isn't a long term. This is a looking to make a little extra cash. And we're going to do, was that 140 shares? Let's see what that'll give us. Okay, so that's about a 5,000, and that's our max position size is 5,000. So we're risking $1.84 a share for the opportunity to make $1.27. Now, some people might not be willing to do that. They might say, if it's not at least 1-to-1 or better, I'm not going to do that. So we're putting this in here, and this is a swing trade. And guys, the rest we're going to have to leave for Monday. But, you know, looking at Monday, we were looking at Triple M. And so, you know, we had a panic pattern that it broke out of, kind of went pretty dramatically to the upside after earnings, pulled back. And, you know, we're looking, could we do a 1 ATR trade? And so we were going to do an example of that. We'll look at that again on Monday. So what did we cover today? Well, we opened a position on CSX. We got out of our iron condors on CRM and INTC. We closed our position, our long call, and we'll look to sell another call on that in the future. And then we did a long call vertical on INTC as well, on Intel. Okay, and then we reviewed some of these positions. We didn't get to review JP Morgan. We had done a long call vertical on that, and it hit our target. We ended up about 50% on that example trade. So here's my ask. A huge thank you to Mr. James Boyd. If you haven't checked out the shenanigans we've been up to, go look on X. Please hit the like button. It helps move things up in the algorithms on YouTube so more people can find this content. Subscribe to the channel if you haven't done that already. And to find us on X, it's Barb Armstrong CS and James Boyd CS. So get out there, be safe, drive carefully. There's lots of little people running around looking for candy tonight. Have a great weekend, and we will see you on Monday. Stay tuned. Lots of great content still to come today. Take care.